Hello everyone and welcome to my channel Options Trader Today. So today in this video I will explain you how the price of natural gas has moved in the last week and how the price of natural gas can move in the next week. See, if you look at the chart of natural gas, what we have seen, natural gas after moving in this particular zone from a time of around 2015 to a level of around in April of 2021. It is moving in this particular zone. That's a quite good time. After that, what it did, it tries to move upside. It was continuously moving high, made a high of around $10. After that, we have seen a continuous downfall. Okay, this is the first thing. Second thing is that after 2020, after the pandemic, it tries to create a same pattern as crude, that whenever it hits its previous high, we have seen a sharp fall comes, and this is being repeated for quite some time, and this fall is more than 30 to 40% when it fall down. Okay, after that it's tried to swing form, and then it's tried to move upside. You can see this is being repeated, and the last time it crosses this particular zone, now it has not sustained this level and it is continuously moving down. Why it is continuously moving down? Most of the important things are that the war situation has come as along with that there is USD dollars getting strengthened and all these things. Okay, so now this level we have not since March of 2021. Okay, so chances are very high now the price of crude natural gas is moving in this particular zone. Okay, so suppose if the price didn't sustain this particular level, it can come down again because there is a strong, it can come down again because this is the zone. Once it moves below this level, the next support coming at around $2.481, which is on a higher chances. Yes, it can touch this particular zone, and if that level also move further low, then we can see it can touch a level of $2.27. Okay, and once the price fall below this zone, then we can see it can touch a level of around $2.115, and from there we can see it can fall further down towards a level of $1.192. Okay, and once the price move below this level, then we can see it can fall further down and can touch a level of $1.8. Keep this in mind. Once the price fall below $2, then it can fall further low, and these levels are a strong levels, so we can see a bounce back, little bounce back will come, but this will act as a resistance once the price fall below these levels. But understand something, we have seen there is a continuous red candles are forming, but if you look at this overall trend after this, if it hit a high $10, we have seen it is quite volatile. So suppose if it form a swing at this particular zone, or it form a green candle at this zone, so the next resistance we can see coming at around $3. Okay, so suppose if the price sustain above $3, then we can see it can go towards a level of $3.29, and from there we can see it can touch a level of around 3.5. After $3.2, we can see a level of 3.5. Once it sustain above that particular zone, then we can see it can go towards a level of $3.98, and if that level sustain, then we can see it can go towards a level of 4.0. Keep this in mind. Once the price sustain above this level, we can see it can cross this particular zone and can touch a level of around $4.390, because this is the gap we can see. So the gap theory will occur, and a probability is high after this level we can see it can touch this particular zone, which is on a higher side, and if that level move upside, then we can see it can touch a level of $4.6. And once it sustain up this level, then chances are very high it can go towards a level of around 4.9. once it sustain over 4.9, then we can see an upside for natural gas. Till the time if it's going below a level of 3.5, we can see a downtrend, but if it goes above this level and a probability of touching 4.9 is there, then we can see it can go further upside. Otherwise there is a continuous downfall. Okay, now understand something, most of the people lose money in trading. Okay, so what I teach in my workshop, suppose if you're trading with $10,000, try to trade with 10 to 15% of capital per trade. Okay, that is 1000 to 1500. Okay, a risk of 0.5 to 1%, that is $50 to $100. Suppose if you took 5 trades, maximum loss you can do is $500, that is 100 per trade. Now this 100 per trade, what it is, the benefit that this particular will not affect your psychology if you lose $500. Maximum what you can do is you can maximum 600, 500, these it will not affect your psychology. And now what people do is they lose so much money in the first day itself, they try to recover it like 3,000, 4,000. In that process they lose their full capital. This is what they do. If you want to attend that workshop, I teach how to overcome all these things. You can mail me regarding that, and we can work out on the timing. So hope you like the video, and if you like the video, please give a thumbs up, and if you're new to my channel, please subscribe. Thank you.